When I came across median line analytics for trading, it really changed my whole direction. And I'd like to show you some of the key benefits to explain that. Financial markets are full of market opinions, but you really can't trade other people's opinions very easily, and not many of those opinions actually focus on risk. So what we do at Trading Motives is focus on finding strong trends to trade with quantified risk. And we use median line analytics, which is very objective and very valuable for risk evaluation. Median line analytics had its origins in the early 1900s, but the methods we use are largely based on the work of Dr. Alan Andrews of Pitchfork fame. And if you look at the left-hand chart here, you'll see a pitchfork applied to three significant pivots, P0, P1, P2, and this was used to help find P3. When P3 was complete and P4 developed, he would then apply a median line or a pitchfork to these new pivots to help find P5. The median line that we refer to as the middle part of the pitchfork, and that's our common terminology for the pitchfork as a whole. Let's take a look at some examples. Here's the S&P 500 on a weekly basis. We apply a median line to the first three pivots here, P1, P2, and we use that to help find P3 up here. And as you can see, this median line has defined trend, slope of trend, which is the strength, and also support and resistance levels. With the support and resistance, what we do is use sliding parallels. These are lines parallel to the median line, and they are used on internal pivots to help find support and resistance. So you can see that this pink sliding parallel has been very, very effective at defining resistance, and conversely this green sliding parallel has been very, very effective at defining support. Now if you can see support and resistance and you can see a trend, then you've got a lot of information to evaluate your risk and trade this. What we also do is we look for changes in price behavior, and you'll note here where price was hitting the sliding parallel here and then started to fail to do that. And Dr. Andrews always said, look for what price is not doing. That's very important. That's called a change in behavior, and those changes in behavior often lead to corrections. One of the enhancements that we've made to Dr. Andrews' work is to also monitor the change in behavior of momentum in conjunction with change in behavior of price. It's as simple as that, and it gives you a lot of information to anticipate when trends are likely to end. Here's another application on emerging markets weekly basis, and you can see a single median line is giving a lot of information. You can see the sliding parallels here are giving information on support, and if you can see support and see where resistance is, this is really valuable for evaluating your risk and adjusting your stop losses. You can also look at applying a second median line here because there are some internal pivots, and you can see that these are significant pivots on an internal basis. And this pink median line is also building validation because price has been tracking up the median line. If we drew a sliding parallel on that, you can also see that support is being very well defined on this pink sliding parallel here. Now, looking at the daily basis of that, you can see the validation of this median line is improved the more price acts and reacts to it, or acts and reacts to sliding parallels. And so you can see the validation here is extremely strong. What we also do is monitor extensions relative to prior swings, and we use those as targets for price projections and also as zones for anticipating potential changes in price behavior. Completely different entity on a completely different time frame. This is Bitcoin, 240-minute chart, and a single median line has been extremely effective at defining trend and support and resistance, as you can see. Once we've found P3, we've applied a new median line to help find P5 up here, and we've also used extension analysis to help also complement the analytics. So what we noticed here using the sliding parallels is that price gapped down through this green sliding parallel, and that signified a change in behavior, which inferred that P5, or this pivot here, was complete. And sure enough, you can see that the price action that unfolded was very, very clearly corrective, and this trend was over. By now I'm sure you can see some of the key reasons why we're hooked on this method for trading. Median line analytics defines trend, strength of trend, support and resistance levels, which is incredibly important for evaluating risk. Trading is all about managing your risk. The method also helps to define changes in price behaviour, and this is very valuable for determining when trends might end or when trends might start. Now, those methods were applied retrospectively, and there's really no substitute for being able to see the methods applied in real time. So to help with that, we've actually offered a discounted trial. All you need to do is to select your group or groups of interest, sign up, and follow the reports. Please take a look at the website. There's educational material there as well as reports that we publish. And if you have any questions, please don't hesitate to email us at support@tradingmotives.com.